Good afternoon, ladies and gentlemen. My name is Orion Suter. I'm one of the senior investment managers here at Sharewise. And we're here this afternoon with Jared Tilley. Now, Jared is a senior investment analyst at NAOS Asset Management. Now, he's been kind enough this afternoon to lend us his time and expertise regarding, in particular, their three listed investment companies. These being NCC, NSC, and NAC. Now, Jared's going to kick us off with a presentation just informing us about these three listed investment funds, and then we're going to open the floor up to a bit of Q&A. Now, as always, I'll kick the floor off with a bit of a couple of questions on my behalf, and then we'll open it up to you guys. Now, if you have any questions you'd like me to submit to Jared, please submit them through using the Q&A function on Zoom, and then I will ask away. Jared, thank you again for your time again, mate. It's all yours.
Thanks, Ryan. Look, really appreciate the opportunity, and thank you for everyone for dialing in. I will just share my, hopefully you'll be able to see it. And if not, please tell me otherwise.
Yeah, it's all up and clear now.
All right, perfect. Now, just before I begin, just a bit of housekeeping. Just want to flag that, unlike others in the market, we don't have a crystal ball. We don't pretend to have a crystal ball. So the disclaimer just says, anything I do say, please seek your own advice. It's general in nature. We don't know your own circumstances. But with that, I'll kick it off with who we are. So at a very high level, NAOS had their first LIC in 2013. We've currently got 3, as Ryan flagged. We're a team of 9 at the moment. We have 1 private small investment fund as well. Across the 3 or 4 strategies, I should call it, we've got $200 million under management, and we've got 6,500 shareholders across the 4 vehicles. Now, just to dive into the LICs in each one, they do vary across the market cap, but essentially we are small and micro cap investors. So we look at any stock between sort of 10 million market cap all the way up to $1 billion market cap. As you can see, the 3 differentiate between the sort of the market caps buckets. The one thing I will say for NCC, there is exposure in that one. It can invest in private companies. So at the moment, we have 2 investments that are privately listed. And that's probably the key differentiator between NCC versus the other 2. Besides that, it'll be the actual buckets that we invest across. Now, moving across to how we're different, as I sort of flagged, we got 3 LICs, but we're very concentrated. So we have 15 core investments. So across $200 million, we've essentially got 15 positions. Now, we take a very long-term view. So the average holding period at the moment is 6 years. And those positions, 10 of the actual 15, what we'd call substantial. So greater than sort of 10%, some are even up to 30%. So we're very hands-on. We do have some board seats across some of those businesses. We've got 8 at the moment. But I'll just stop there. We're not activists in any sense. We're sort of what you'd call sort of patient long-term capital partners. So we're not out there screaming about activism and all the rest of it. We're just very much patient capital. Now, what we look for in terms of a particular stock, it's very much sort of quality focused. So we want a business that has a competitive advantage, where we want to make sure that that's sustainable and growing. We look at financial strength. So that's sort of looking at the strength of the balance sheet, financial cash flows as well. You're probably aware when things get tough, those are probably the 2 things that make sure the business can withstand any pressure and push through a particular cycle, whether it's COVID, the GFC and the like. So financial strength of a business is very important. And then it's about the management. Firstly, their alignment with other shareholders. We want to make sure that's true and there is strong alignment. We want to look at their track record, what they've done previously, where they've been, what they've done, and then finally, how they allocate capital as well. It's very important. Now, although this looks a little bit busy, there's plenty of bubbles and all the rest of it. This is what we assess from a qualitative point of view. So on the far left, you sort of got that internal engagement. So that's looking at sort of the management team, the board. We do, a lot of DD work in terms of on that side of things, but then it flows through to other factors as well. So that's where you can look at stakeholders in and around the business. So that could be anything from internal staff, former staff that have left, competitors, whether that's listed or unlisted, suppliers as well, and also customers. So we're trying to work out, when we look at all those factors, what's the business's strength? Do they have pricing power? Are they a price maker or taker? How are they to deal with as well from a customer point of view? Is there service? A lot of companies say that they're very good with service, but is that true? Do they go the extra mile to help the customers? And then the other part of the research is very hands-on. So we do calling, we do product testing, we're on the road quite often looking at site visits and looking at different locations from companies across Australia. And then the rest is probably the usual stuff that you hear from everyone else in terms of like the announcements, transcripts, everything else we can get our hands on as well. And then my final slide on that's probably very quick, Ryan, but I think it's important to look at we always invert our thinking as well. So these are a few points to sort of say what we don't, or why not to invest with us. So as I sort of flagged at the start, we're very concentrated. We only got 15 positions at the moment, and a lot of them are substantial as well. We're very long-term in nature. So 6 years holding period. We do want to, we can look for businesses that we can hold for a very long time. The one thing as well, we're emerging companies. So anything between sort of that, 20 mil to 500 is probably our sweet spot. It's probably a little bit small, probably 100 mil to 500 mil. And because of our concentration, the positions we look at, we're very much benchmark unaware. So, if you look at a lot of your clients might be looking at the small odds, none of our investments are in the small odds. And the other factor as well, I probably should have flagged at the start. We're industrial focused. I know it's a bit of a cliche, but we don't look at banks, don't look at miners, early stage businesses as well. They just fall through our filters. So it's very much industrial focused. And I will stop there. I know that's very quick. I'll pause the presentation, Ryan, and then we can happy to unpause it. We can jump back in and ask any questions you like. So hopefully that was pretty quick.
No, thank you very much, Joe. Really appreciate the presentation. Really paints a strong picture to start with. Now, I'll just kick things off with something that's really grabbed my attention. Now, obviously, the qualitative information gathering that you guys do looks really in depth, as you illustrated on slide 7. Now, when it comes to how you guys are actually focusing your time, because you cover a lot there, there has to be a focus. What do you guys find as one is the most influential factor, and 2, where you spend most of your time?
Yeah, look, it's an interesting point because when you got 15 positions, an average holding period of 6 years, we don't sell, we don't buy often. So we are sitting around looking at stuff and doing a lot of DD on that. I think that probably the external engagement is probably the key for us where we talk to. So it's interesting, but we spend a lot of time on LinkedIn trying to find stakeholders, whether it's customers, former staff as well. Former staff are really quite interesting. Now, they are generally biased in their views leaving a business. You never hear someone say that was the best business, but I had to leave because of X, Y, Z. I mean, like family situations pop up, sure. But they're always leaving because of a bit of a bugbear for some reason. They're excellent in terms of understanding the culture and certainly how businesses run. Salespeople are always good to talk to in terms of the product, how they pitch it. It's always that. So that sort of area we spend the most amount of time and trying to understand, who are the suppliers, how they deal with them, and then how's the product, perceived from a customer's point of view as well.
Okay, all right, awesome. Now, just to shift here to focus on NAOS's overall market view, especially being in a small to micro cap space. Now, ASX is currently broken all-time highs today, right? The US is actually on an absolute rip and tear at the moment. Small caps over the past 18 months appear to have struggled in certain sectors. What gives you guys confidence in your portfolios and in the market at the moment?
Yeah, it's a very tough one because this is another one that I just sort of put in the back here. So like everyone talks about this dispersion between sort of the large and small caps. And as you said, the large caps on a record highs. It is very tough at the moment. Interest rates are having an impact on the smaller end of town. And there's a lot of players that we see as well, just pretty much go, risk off. Don't want any uncertainty, want to be at the top of the town, want liquidity. And there's that liquidity factor we've seen that's really been dried up in the small cap space. Everyone's talking about, that eventually the liquidity will flow back down to small caps and they will start looking at the smaller end of town. As I said, we don't have a crystal ball, so I can't say when that's going to happen. But if you also look at all, big records post sort of crisis, and not saying we're in a crisis at the moment, but we did a bit of analysis previously, and this is sort of the 4 big recessionary environments we've been in. The far right-hand column is the actual small cap or small ordinaries odds post the bottom to the next peak. So as you can see, when they do turn and the environment does turn, the small companies in that index has really benefited going forward. So can't say when, but we sort of think that interest rates are probably coming down next year, some period. That'll start giving a bit of confidence in the market, I believe.
All right, brilliant. Well, thank you for that clarification. Now, just to focus back on your investment theory, with obviously you guys having a very specific set of criteria and you're commenting on companies falling through your filters. The first question I have is obviously, can you give us an example of a stock that has fallen through your filter or only made it through halfway through due diligence, and then you call it quits with the company? Or do you guys, another one would be where you guys are doing due diligence on a company, you end up investing with them and you call it quits after a couple of years because maybe something changes with the company? I know you said you got longer term holding periods. When it comes to your due diligence that you're doing, is it a bit of you do due diligence, you come in, you invest, you might sit back and it's just passive, or are you guys constantly updating that due diligence to make sure it still fits in within your preset filters?
Yeah, so it's very much ongoing. So we might look at a company first up, meet them at financial reporting period. It might be some AGMs at the moment, so we go to a lot of them.
Yeah.
The smaller in the town do quarterly reports as well. So it's any of those sort of numbers where we sort of start the DD, and then from there it's always ongoing, watching what's happened, and just building our conviction. So as we sort of go through, we always want try to have our conviction continue to build as we continue to find more information, speak to more suppliers, customers, and the like, and obviously people within the business as well. But as you said before, things can go wrong. You can find stuff that's you sort of think back and go, well, that was fine, but let's go back to the original thesis. Was this what we are seeing at the moment? And there's a lot of things and times when that can fall apart. Like management say they're going to do one thing and do another thing. That's where we sort of come unstuck a few times. And it's definitely looking at management's track record and see what they've actually done through history, and can actually say what they do.
Yeah. Okay. All right. Gotcha. Now, just for some specific examples. Now, with the 3 LICs you guys have, what's your favorite pick in each of the 3?
In terms of an underlying investment, it's probably MaxiPart. So the ticker code is MXI. They're essentially a supplier of aftermarket truck parts. So if you're going to order a new TV, new set of golf clubs coming for Christmas, it's going to be delivered on a truck. If that truck breaks down, MaxiParts will most likely supply, gears, brakes, whatever it might be to them. They're a nationwide customer, so there's 26 branches across Australia.
Yeah.
Really interesting. They've had a few acquisitions of late. They've probably not hit the straps just yet in terms of full integration. And again, they are exposed to economic cycles as well. So the East Coast has been hurting at the moment, but they've also got a good exposure on the West Coast with all the mining resources boom as well. So it's very diversified, plenty of customers, plenty of parts. And there's only, from a market point of view, there's only probably 3 or 4 players that dominate that space. The rest is all sort of mum and dad operators. So we do think in a highly fragmented market, they can continue to deliver decent returns going forward.
Oh, well, thank you for that one. Now, when it comes to the current allocations in the LICs, are you guys fully allocated at the moment, or are you, actively looking for investment opportunities?
We're always looking for investment opportunities. Like we don't just sit on our hands and sit on the existing positions, but we do run very little cash. So we do believe in having full exposure to the market. We're not cash allocators or trying to time the market or anything like that. So it's sort of that, 3 to 5%, if not less, that we try to manage at every point in time.
Yeah, brilliant. Now, obviously, the lists themselves have seen a bit of a struggle with their individual unit prices. Do you believe they're fundamentally undervalued at the moment, or are they trading at par associated with how the companies they hold are situated?
Yeah, it's always a tough one, an interesting one we look at. I mean, one is probably trading at NAV. The other 2 are probably trading below NTA. We get asked it a lot. We do pretty aggressive in our capital allocation, trying to do buybacks. They've got dividends, all the rest of it. It's very aggressive with that. But at a point in time, the discount can widen or can narrow, so it's pretty difficult. But yeah, for the ones we do believe in. And as you said before, especially where the small and micro cap market is at the moment, we do think there's plenty of stocks undervalued, probably including our LICs.
Yeah, okay. Brilliant. Well, thank you for that. Now, there is a specific slide saying, obviously being quite open to frame as to why the LICs may not be for you. Realistically, when it comes to, why they would be a good investment opportunity, what do you think makes them stand out in amongst a potentially fairly saturated market when it comes to LICs?
Well, probably the one thing I'd probably say is we're very different to others. So there's not that many LICs out there that hold 15 positions, that are highly concentrated, very long-term focus. It's probably those are the three key things. And I mean, it's always the interesting one is, being in a listed investment company structure, we can take those long-term views.
Yeah.
So we're not dealing with redemptions application on a daily basis as well. So we sort of can find good stocks in that illiquid market at the moment. So that's probably the two or three things I'll probably flag.
Yeah, brilliant. Well, there's a couple. We've just had a question come through here. An individual asked, can you please comment on the motives behind the sell down of COG Financial Services?
Yeah, it's an interesting one to come up of late. We were sort of substantial, and we got actually approached as some parties wanted to diversify. Well, the company wanted to diversify the share registry as well. So it's always a tough one when you build up a position so large. It can be an overhang in the market, and so some people think that as well. But yeah, we're always happy to diversify, and there was a few people keen to get on the register as well, so I'm happy to provide that liquidity in a point in time.
Yeah, brilliant. Okay, well, realistically, I think Jared, that about wraps everything up. I don't have any questions for us now. Is there anything you'd like to leave us with, mate?
No, I suppose if you have any questions or comments, please reach out. We're always just a phone call away, and as I said at the start, really appreciate Sharewise's opportunity to present.
All right, well, thank you very much for your time and expertise this afternoon, Jared. Appreciate it as always. And ladies and gentlemen, thank you very much for your time. Enjoy the rest of your day. Cheers.